Good afternoon. Today is Friday and it's June 23rd. The time right now in Singapore is 5 minutes past noon. And let's do a bit of a recap. And overnight, we have a major move by the Bank of England in which they hiked interest rate more than expected. Market was expecting a hike of 25 basis point. They hiked double of that to 50 basis point. This is, of course, on the back of a resurgence in inflation. On Wednesday, we saw the report of the consumer price index in the UK, and we saw an obvious pickup in inflation, in the core inflation, meaning to say if we remove the food and energy component of the CPI, we can see that the CPI increases from the April number of 6.8% to 7.1%. And this is the highest since the start of the Ukraine war. And this is possibly the reason why the Bank of England decided to take a more aggressive stand by hiking interest rates. So after that rate hike, the market was left stunned, and most of the major banks have now revised their forecast for US interest rates going towards the end of the year. Now they expect the next meeting in which they will decide on their interest rate decision in September to raise by another 50 basis point and another 25 basis point towards the end of the year. So we are looking at possibly another 75 basis point from where we are right now till the end. So the current interest rate in the UK stands at 5%, which is the highest since 2008. So this is where we stand. Now, this obviously did not impact the US equity markets. Equity market yesterday was still waiting for the Fed Chairman biannual testimony in front of Congress. They have presented it to the Republican and as well as presented to the Democrats in both chambers of Congress. And he basically maintained his stand in the sense that he feels that inflation is still very sticky and he is not done hiking interest rates. So he still maintained that there is likely to be more interest rate hikes coming forward after the pause that we see this month. So that basically dampened market participants' sentiments, and we saw most equity markets, with the exception of the Nasdaq, all has retreated. In the Dow Jones, in what you are seeing right now, this is the 4 hours time frame. You can see the Dow Jones actually lower overnight. So we have seen the market peaks for now last Friday at 34,588. Now, this is no coincidence because last Friday was also the expiration of a bunch of options. We have stock options, we have options on futures. They are all expiring on last Friday. And that being the peak is no surprise. Now means to say the market right now is in the phase where they are taking profit. So this coincides with what we are seeing right now. In the short term, we possibly could see a rebound. So yesterday we are expecting a rebound, but the rebound did not happen. So now we have still maintaining that a rebound is possibly due. Maybe will not go back to the all-time to the high at 34,588, but at least a 50% climb back to where I think the market will stabilize at 34,200 to 300 levels. And from there, we probably will see another leg of this decline towards the 33,350 to possibly 33,600 points. Okay, so basically this is the area in which I think the market may stabilize going forward. In the S&P 500, we also see a pullback, but this pullback is not as deep as what we saw in the Dow Jones itself. And the market actually registered a low sitting just above an area which I believe is going to be a technical point, and that area is 4,355. And the low last night was 4,351. So we actually did enter this area briefly before the market rebound. So if we see a rebound, like I say, in the Dow Jones, we're expecting a 50% rebound from the most recent high. And if we do also get a rebound in the S&P 500, we could possibly see the market going back up above 4,410 levels. Okay, so and then followed by another down leg before it attempts to go even higher beyond this last Friday high. Okay, in the Nasdaq actually closed on a positive note. We can see that Nasdaq has a high at 15,284.65. This is followed by the last few days of pullback, but last night in the market, after registering the lowest point this week at 14,794, it managed to rebound and close above back above 15,000. So that could leave the door open for another challenge of 15,284. But of course, there is always a possibility that it also follows the other two equity index in doing a rebound of 50% and then pull back for another dip. So let's see what happens going into the last day of trading for the week itself. Over in Asia, we can see the Nikkei has basically starting to take profit. The high traded on Monday was 33,772.9. And although the market has been relatively quiet, but this morning the market opens with a wave of profit taking the index down to 32,600. And we possibly will see further losses over the next few sessions. My immediate target for this pullback is somewhere between 31 to 32,000. So I know it's a wide range, but somewhere within this catchment area, hopefully we can see a bottom, and we'll see from there what happens. In Asia itself, Hong Kong market reopens after 1 day of holiday, in which the Chinese in both mainlands and China celebrates what we call the Duanwujie, which is the rice dumpling festival. And when it reopened this morning, it actually went down below 19,000, and we are currently have a low at 18,825. So this level here is a lot deeper than what I expected, but anyway, it is still part of a corrective pattern, although it does look very, very sharp. Let's see whether it can hold out. And if it can hold out somewhere between 18,500 to 18,850, there is still hope for another leg up to challenge the March high at 21,000. So again, we have to watch. Over in China, the market remained closed for the rice dumpling holiday, so there is no market update here. So this is up to Wednesday. So yesterday was a market holiday, and it stretched all the way till today. So we have no updates. So in the energy markets, we can see that crude oil prices have a major retreat. Now we are trading lower than earlier this morning prices. Now we have a low at $68.76, and this is a lot deeper than I expected. Now the market is pulling back on the back of a resurging dollar, and later on when we go to the dollar rates, you can see that the dollar is possibly bottoming out and it's getting ready to rally, and that is definitely a negative for commodity prices. So we see energy prices pulling back. So this will be a new structure. For the time being, I cannot rule out for another leg up, which I have always maintained that they will pull. This market is actually quite bullish, but right now it does seem that there is a little bit of fundamental change here. So let's see where this pullback takes us. Okay. Over in precious metal, because the dollar strength, all commodity prices suffered, and we can see gold prices has actually decayed all the way to $1,910, which is the lowest since March this since the market hit a high, the all-time high in the early part of March. Sorry. Okay. So now there is a possibility the level that I'm looking at has been adjusted. I have a target price of $1,911.75. So the market actually went below it and then by a little bit. So here is going to be crucial. On the 4 hours time frame, I need to see a very clear-cut reversal pattern in the candlesticks. And if we do get one, then there is the high probability that the low may be in place. And for all I know, gold could be getting ready to rally. And the target for this move is all the way back to 1,984. So it's going to be a big move here of at least $75 or $70 at a minimum. So look out for that possibility here, but on condition that we see a reversal pattern around now. Okay, so tonight's closing will be crucial. So in the silver market, we also saw a massive decay in prices all the way to $22.11, which is a lot deeper than what I thought it would. In fact, it is even lower than my catchment area of $22.28 to $23. So now the low is $22.11, and it is bordering on my target. I have a target here at $22.10. So the low so far at $22.11 almost hit the price. Again, I need to see evidence of a reversal. So if I see a reversal pattern in both the gold and silver market, I would have more confidence to say that a bottom could be in place at least near term for a rebound. So do watch out for that possibility as well. And for that to happen, we may have to see the dollar starting to decline. But again, it is not always the case. Okay. So the dollar index I mentioned earlier on does appear to have found a strong bottom here. The structure of the pattern itself, originally I was thinking market may actually decay all the way to test the 100-point level. Now, of course, this is the dollar index, okay? And the decline from 104.61 has traced out a very neat 5-wave, although this 5th wave is a little bit shorter than I expected, but it is a 5th wave nonetheless. And I draw a simple resistance line here, and the market, as we are speaking right now, has already broken free of that. So that is the first sign that an important low may be in place in the dollar. So we're going to see this evident in the other currency pair. If we see the same thing in, let's say, the euro dollar, the sterling, and let's say dollar Canadian, then I think we have a very good chance to say that the dollar may have actually hit a bottom and is getting ready to rebound. Okay, so the first one, euro dollar hit a high of 110.12 overnight, and we also have a 5-wave pattern very clear. It did not quite get to where I thought it would be, because I was thinking market would go to 110.80, 110.90, but the market did not get there. But so far, as I see that there is a 5-way structure very neat in place. The thing here is that this black color line, which I draw, is a support line, has not been broken yet, but maybe it's a little bit too early. We may have to wait for London to open in 2 hours time to see whether that actually pans out. So if we do have a breakout of this euro dollar rate below this near-term support, then it pairs in with the dollar index outlook in terms of a bottom in place for dollar. Okay, so if that's the case, I think all the other currency rate will have to come back down. Okay, so in sterling, like I said, sterling is a little bit unique. The pattern may be a little bit different here. On the back of a very aggressive rate hike by the Bank of England, yesterday we saw the market ran up to 128.40, and within the hour, the New York market opens and we saw the dollar strength came back, and that basically cancel out the strength in the sterling and see the sterling versus the dollar coming down. And right now, it is trading just above the 127 even level. So that may complicate matters a little bit. But by and large, I still think somewhere between 126.50 to 126.85, we could possibly see a bottom for this, because this is still part of a 3-wave. Okay, and if that's the case, there's still a possibility that we may see a run up in sterling prices towards the 130 level. Okay, so the sterling structure is a little bit different from the euro dollar for the first time in so many months. So we can see that this could technically give us a little bit of confusion in the currency pairs here. In the Aussie, you can see the Aussie is still coming down very aggressively as we are speaking. Market peaks out at just under 0.69. And I have always maintained that the market is looking to pull back, and actually mentioned this level 0.6630 to 0.6680 throughout the week itself. And now the market is coming down, and the last price traded is just above 0.67. So we're getting very, very close to this target range. And once you get there, it will be very crucial to see how it reacts. If the market punches through this level, then of course we have to reevaluate. But if the market stabilizes here and form a base, then maybe that could be the 50% pullback for another rally upwards beyond 0.69. Okay, dollar Canadian is also very telling. It also traces out a 5-wave pattern, and the market actually went down to as low as let me see, 1.3140 last night. Okay, and it did not go much lower than that, because I was expecting price to actually dip a little bit lower, nearer to the 131 level, but it did not. So now we are seeing at this particular hour itself, we can see that the dollar rate is beginning to rally. It has yet to broken this black color line, which is the near-term resistance line. If it managed to close above this line, that will be another confirmation other than the euro dollar that the dollar may have hit an important bottom. So if you are still short dollar, look to cover your position for safety reason. Okay, then we watch. Now, the only one currency pair that's very different in structure with the other currency pair is the dollar versus the yen. Now, all the while when the dollar is falling, we can see that the dollar yen has been rising. So this is a little bit of a dilemma. Why is it that the dollar falls against all major currency but rises against the yen? It is very much a function of the weakness in the yen, because the Bank of Japan has maintained their ultra low interest rate environment, which is still negative 0.1, which they have maintained all the way from 2016. So as the other major currency pair this week in particular, last week we have Reserve Bank of Australia, we have Bank of Canada, and this week we just have, yesterday we have Bank of England, we have the Swiss National Bank, and we have the Nordea Bank, which is the Swedish central bank, all raise interest rate. That means to say that the interest rate differential between Japan and all the other major economies are actually widening. So this is actually a negative for the yen. So we can see that this is basically how I can explain why dollar yen has a different structure here. But again, we are quite close to a technical point in which the market may be looking a little bit toppish, in my opinion here. So I won't be surprised if the market falls back down. So do look out for that possibility here. Now, the star of the other asset class is actually in a digital asset. space here. We can see the Bitcoin has rallied from 24,756 all the way to close to 31,000, which was originally my target. And this, of course, has a lot to do with first BlackRock filing for a Bitcoin ETF license, as well as the other major banks coming together to start a crypto exchange. And this could actually be the big boys evidently muscling into this space here, and that is definitely good news for the digital asset, because the big boys with their considerable financial muscles are traditional players in financial assets. Now they are beginning to adopt a more positive outlook for digital assets, and that can only be good news for this particular space here. So look out for buying opportunity. If we do get to see a more severe pullback, 50% pullback from 24,756 to all the way to 30,755. The 50% mark is somewhere between $27,000 to $27,800. So if we see a pullback, it may seem a little bit far-fetched right now, but everything is possible in the digital space here. Okay, so if we do see a severe pullback, look out for some kind of buying interest around here and see if we can actually position a buy. Okay, this market looks very positive right now. Okay, this is all I have for you, and I wish you guys a great weekend ahead. I'll see you next week. Bye-bye.